gold in particular. We'll talk about that a little bit later when I do my analysis. But FTSE seems to be hanging around, Ash. How you doing, mate?
Yeah, really good, mate. Really good. The FTSE does seem to be hanging around, and it's an interesting dynamic. Lenka's talking about the pound versus the yen, and the pound plays a big part. We're talking about the dollar because the dollar really is driving everything right now. So if you want to kind of short the dollar, you have got a plethora of options to buy. You could buy gold, you could buy oil, you could buy the indices. But the interesting dynamic with the FTSE is that because I can't share my screen. If I could get somebody to enable me to share my screen, I will show you my screen. But the interesting dynamic with the FTSE is that because the currency that the index is connected to plays a part in whether an index is going to do well or not. If you were to look at the FTSE, with the pound so weak, the FTSE could well do okay out of it because of the spread differential between the pound and the other currencies. And what we're starting to see happen is that market participants and investors are starting to come over to the FTSE, switching positions out of things like the NASDAQ and the S&P into the FTSE 100, as they have done with the Russell 2000 as well, because the dividend that you can receive from the FTSE is much greater right now than certainly that you can get from the NASDAQ. So the FTSE becomes a really interesting index, and actually as a spread trade, it is perfect right now. FTSE long, NASDAQ short. But as you quite rightly said, things are turning. Now, what I find interesting about the FTSE is that this really is still a higher low. So we've got this higher high here. So if this was an area of resistance that it was unable to get through, then it started to burst to the upside, come down, and it's still managed to hold this position right now, creating that higher low and potentially taking us much higher. Now, what I want to see with the FTSE is a certain certain other products doing relatively well alongside it, and that would give me more confidence that the FTSE is going to actually rally. So if I look at the NASDAQ to start with, the NASDAQ's a pretty good measure of risk in the market because of the way the NASDAQ is built up of companies that are growth companies rather than dividend-paying companies. And if we look at the NASDAQ, it's right at the lower end of the pattern. So drawing a trend line from this low here and then going right to this low here, what we actually see with the NASDAQ is a hold and a relatively good bar. Now, I've got the volume down here as well, because what I'd really want to see on a bar like this is a decent volume spike. And actually, we haven't really got it. There's the volume that we've really got from Friday was not that much higher than the rest of the volume over here. I'm looking at the 90 days here. And we discussed this on Thursday, Jeff, about the time frame sort of volume. I actually quite like. I was looking at the 60-day, but I had a little play with the 90-day, and I prefer the 90-day because it is a quarter of data. So the volume it's not really spiking here. It's not really going anywhere really. It's kind of it's nestling in the same place. So not an amazing battle to kind of get a firm grip on whether this is going to be a hold line or whether it's going to continue to the downside right now. And it will come down to Thursday. But if this is able to get to start to rally to the upside, the FTSE is likely to do the same. And again, the volume's not particularly telling down here, but the FTSE is likely to do the same and start moving up. So I'd like to see the NASDAQ holding at minimum to want to buy the FTSE. I want to see oil do well as well. And the reason that I want to see oil do well is that the FTSE is very, very connected, is extremely well connected to the business cycle. And the business cycle really is about defining whether we're in growth or whether we're in contraction. And oil, of course, is the best products probably that we got on MT4 to tell us whether we are in growth or contraction, because the more growth you have, the more commodities are used. So Oil would be one of the two major stocks on the FTSE is BP and Shell. So if oil starts to go higher, then BP and Shell will tend to do well as well. And they have held on very convincingly, BP and Shell, while the market's been coming down. They've managed to hold ground pretty well. Is oil turning around here? Inverted head and shoulders. Also a higher low here. We haven't got the higher high, but we do have this inverted head and shoulders. So if oil can start to boost its way to the upside, that's going to play into the FTSE's hands. That may well come down to some dollar weakness. It may well come down to some global growth rather than global contraction. So there's a few things to kind of pay attention to here, but I don't want to see oil coming down. I don't want to see the NASDAQ or the S&P coming down. And if I don't see those things, then I will be quite happy to buy the FTSE. And this is where the interesting dynamic where the FTSE comes into play. Dollar strength means pound weakness. Pound weakness could mean FTSE buy. Dollar weakness means index and commodity strength. Index and commodity strength could be a FTSE buy. So the FTSE is actually in quite an interesting position when you come down to the dynamic of the of global equities and of products that are on offer. So the weight really is in the FTSE's favour in whichever way you look at it. What we can't have is the dollar strength pushing oil down while also pushing the while also pushing the pound down. So these markets really have to be looked at. So I'll look at the pound dollar, I'll look at the oil market, and I'll look at the other indexes to kind of see if I can get a firm grip of what to do. As you rightly said, the FTSE 100 is closed tomorrow. So what will happen is on Tuesday, we will see oil, we'll see the dollar, and we'll see the S&P and the NASDAQ either hold or give way. If they've managed to hold, then it might suggest that we're going to be buying up into that into those rate decisions. And the Bank of England may only go 0.5%. You know, this is the other interesting thing. The Bank of England have really been the only, in my opinion, honest central bank coming out and saying, look, the recession's here, it's coming. So they are much more likely to be maybe just a little bit softer with their interest rate hikes, particularly now you've got a new government in place. So if they go to 75 basis points, that could change the dynamic. But there's a chance, maybe slim, but there is a chance that they stick at 50 basis points, and that would probably boost the FTSE 100.
Yeah, look, it's going to be an interesting week, and I think we'll probably see a bit of toing and froing as, although on the dollar, you've probably got to expect that the market has already priced in a 75 basis point rise.
Yeah, absolutely has. Yeah, absolutely has. What it hasn't yet priced in is the 100 basis point move, and that is on that's also on the table right now.
Yeah, that was my next point. And what happens if they do? I mean, traditionally, you would think that's going to mean a strong dollar. And of course, it's on a tear, right? It's just so strong at the moment for reasons that most people would say the Fed are responsible for. That will change one day. We all kind of have that same feeling. But for now, it's really hard to swim against that really strong tide. Really,
it is,
really
mate.
difficult.
Nothing helped last week. You know what investors were looking for is inflation data to start saying actually it is leveling off. You know, so the retail. So what we had was almost the perfect storm against investors speculating on the fact that the Fed are about to at least pause their interest rate hikes. We had higher inflation numbers, or at least higher than expected inflation numbers, which puts the ball back in the Fed's court to at least continue on their path. Then we had good retail numbers and a labour market which is still relatively strong. So they're in this position where they're like, well, the economy's doing okay. So you know, we're not damaging it by raising interest rates, and inflation's going higher, and we've got to battle that inflation. So let's keep going. And as I say, the question really comes in is we've priced in that 75 basis point rise, but we haven't yet priced in 100 basis points. Will they go hard and front load it again And I think we're again sort of, to a degree data dependent, but really it's kind of D-Day now, isn't it? So the decision will be made. I think it probably will be 75 basis points. I think the inflation numbers at least weren't spiking again. So they might just stay on this path and see if they can get it under control a little bit more gently than the aggressive 100 basis point rate hike. And then it's what everybody else does. We've seen the euro rally off the back of some hawkish comments from the ECB, but the eurozone's in terrible trouble. The pound, the UK is in terrible trouble economically. It's in a terrible state, which is why we might see a 50 basis point rate hike, which is the same as 0.5%. Just for anybody that doesn't know, 0.5% is the same as 50 basis points. So you might see a 50 basis point rate hike rather than 75. What does that do to the pound? Doesn't help it out much. So we might see the pound,
everyone else is going harder. So,
yeah.
In terms of differentials, it means nothing. If anything, it's probably worse.
Yeah, absolutely, mate. There's some concern, and we've seen the yen rally. We saw the Swissy rally as well for the first part of the week. Interesting that it didn't sort of carry on, but we did see the Swissy rally for the first part of the week, so that suggests nervousness that is kind of permeating through. If they stay on this path, is it the right time to get into stocks? A lot of people are calling the bottom, but I don't know why. I don't know where they're getting their idea that this is the market low. And if you look at the people that are saying it, it's kind of all the people that own funds, so they need investment. So the JP Morgan will come out and say, we're near the market bottom. But it's like, do you believe that? Or are you just trying to make people, are you continuing to try and get people to invest? So you have to be very careful when you're listening to, what's been said and who's saying it and what their motivation may well be for saying what they're saying. And I think all we can really do is go on the hard data. And the hard data right now is suggesting that the relief is minute. It's a minuscule relief that's going on. So it's not really the time to be calling a market bottom, even though it may well be in. I think it's too early for us to say with any real confidence that that's the case.
Yeah, it's interesting. I'm seeing all sorts of things in my Facebook feed at the moment because I'm in this financial market. I get all sorts and manner of things, as I'm sure you would as well. And anybody who's ever Googled something to do with trading or financial markets, they're coming out of the woodwork at the moment, right? All these, let me do it right for you people, making $7,000 a month and all this sort of crap that you read. And it's because, in my opinion, they do feel, or somebody's saying that as you just said, the market may well be at its bottom. And I, like you, disagree with that wholeheartedly. But really, they're coming out because they know eventually it will turn, and they're going to be right. So they're going to be right for once in their life that the market does turn. So all of these educational people who are coming out at the moment, I treat them with a bar of salt.
Mate, that's one of the reasons I got rid of Facebook, for that very reason. Like every year there's a new Judas, and that's really what we've got. We sort of like every single year there's just a whole bunch of people that come out and say, I've done 7,000 and whatever in a month, and just romance people to kind of go in and experiment in currencies and the stock market. But as you and I know, it takes more than a week's training to kind of get a handle on this stuff, and it's a real shame. It's a real shame that we've got we got this faction in the industry, but. I don't think anybody here is I'm not going to use the word stupid, but naive enough to kind of believe that that's the way that you make money in this market. Because you just be professional and you'll be absolutely fine. Yep,
it's a business. It's not a gamble. Simple as that. One thing I want to ask you before you go, because we won't be together tomorrow. There is no trading buddies due to the funeral, of course.
Yeah.
I don't know if you've done your analysis on the currencies yet, but. Lenka had a chart up on pound yen. I'll be putting that up in a minute myself. Can the yen actually sustain a rally?
Only if there is any kind of idea that the BOJ are going to do something. And right now there's not. You know,
No.
the BOJ, they've held firm. But what do you know what's really interesting about the yen? I mean, the yen's trade balance is atrocious. You know, we're not looking at the same dynamic of a currency that we used to historically, where it would be a genuine safe haven because they had, you know, decent trade balances going on. The Japanese economy is not what it was. But what's interesting is that every time there's a little meeting that goes on between the officials over there, then everybody's like, it's going to happen. It's going to happen. They're about to kind of change stance. So people start buying the yen. But you know, these kind of supposed closed door meetings are just, you know, people are kind of putting cups up to the wall and seeing if they can figure out what's being said. But the only thing about the yen, the answer is yes in a way, but it will be yes because they have to, not yes because they want to. You know, that how can they possibly sustain the currency as weak as it is? They really can't. You know, and this is exactly what we saw with the ECB. The ECB didn't want to move, but they didn't have a choice. Everybody around them was moving. So you can't be left where you are. And as I say, if your trade balances, which this is really about, right? This is if they are lowering their interest rate, the idea is that they sell more goods and services because they've got a cheaper currency than everybody else, and they can be very, very competitive. But if your trade balances aren't really reflecting that, then something's wrong. Something is fundamentally wrong with the structure of.
You've got to rethink, haven't you?
You've got to rethink, yeah. So eventually you sort of like go, you know what, we can't beat them. Maybe it's time to join them. And the ECB have moved. So can the dollar go to 4% while the yen's still in negative territory? I mean, it's questionable, isn't it? So eventually, mate, you're going to make a whole bunch of money out of that one. But I don't know when you pick it. I really don't.
Yeah,
I mean, do you speculate now? Because you'll be too late by the time it's going to happen.
I'm about to tell you why I think it's maybe possible for a short period of time, and I'll just stick with that. Thank you, buddy. As I say, no show tomorrow for Trading Buddies. We'll catch up with you on Thursday, and have a great week.
You too, buddy.
See
I will see you soon.